All right, good morning, everyone. My name is AJ Elisha, and I am a tutor for Dr. Biz Academy and also your gold specialist. So today is a market breakdown for gold and how I came to, these results. And I want to share this experience with you so that this can also assist you as you try to trade and take a trade personally, as you try to practice and become profitable. So first things first, I'm going to give you a thorough breakdown, okay, top-down analysis from top to bottom. Okay, I hope this helps you. So yeah, pay attention. It's going to get serious real quick. Now, first things first, if I want to take a trade on gold, there are a couple of things I like to do. I like to understand the trend, okay, and understand where your price is coming from. So now I'm going to break down a couple of trades that I took a few days ago and how I came to those particular results. And I hope this result also help you in making good decisions in the trading market. Now, the first thing I did was I took a look at price, and I understand there was a very strong bearish momentum here. Okay, this strong bearish momentum allowed February to pull down and pull up backward. And there's something really particular about price is that the way it shifts. Okay, and you need more than one time frame to get the correct answers in terms of results. Now, what I did notice is that when price made this bearish momentum, right, price, which is gold, sold down even further, all the way to 4,408. And when price got to 4,408, there was a pullback. And now I was interested in this particular pullback because first things first is that when gold sold, there's a couple of things that I noted real quick. I noticed a fair value gap here on the daily time frame, meaning that fair value gaps tends to act like magnets for price. It tends to pull price back to fill it. Okay, how do I put this? Imagine this is price is like an ocean, yeah, and all of a sudden there's a big hole at the bottom of the ocean that water has never gone in before. Now imagine the hole appeared all of a sudden. Of course, that hole is going to draw water in because price is fluid and price wants to fill those gaps. Price wants to fill the hole that is at the bottom of the water so that water can accumulate there as well. That's the logic that I can use to explain it. Then what I noticed for the fair value gap is that price is going to pull back into this area, meaning I'm going to try to look for sales from this area. Now, the other thing is on the 4 hours time frame, I also noticed that there was also another fair value gap here. Basically, there was more than one reason why price should pull back to this particular area. Okay, to the particular area, right? There's more than one reason. So, what was the first thing I did? Now, I'm going to give you guys a couple of advice. First of all, as you try to trade gold. Now, as you try to trade gold, we try to do some kind of very nasty things like giving you two bias. Now, what do I mean by bias? Bias is that a bias is like you analyzing the market and picking a trend direction to follow to trade. Okay, so basically, having a trade bias is substantial to you already making a decision to look for either buys or sells. You need your bias to be correct because if your bias is wrong automatically, before even taking the trade, you are already wrong and you're going to lose. Okay, so your bias is the first and most important thing. It's like coming out of the day, I'm looking at the cloud and say, okay, should I wash my clothes and put them out to dry today? Okay, you're looking at the weather. The weather is sunny. Okay, then it's good for you to wash and try out your clothes. But weather is looking gloomy, dark, and lots of cloud and rumbling. Rain is going to fall. And if you try to wash your clothes and put them out to dry, it will get wet and probably the wind will push your clothes away and you fall on the floor and you would have to wash them again. So your bias is that important. Now, what I noticed was that price gave us a bearish engulfing candle, and there was also a bearish engulfing candle, the previous bearish engulfing candle, and there was also some rejections. So basically, it was giving a bearish bias, okay, for that day, and as well a bullish bias. So when the new bearish candle opened, okay, people's perspective would be to want to continue the sell. Okay, to really want to continue to sell. Basically, it was the previous bearish day. They would want to continue to sell, and exactly by 12 a.m. in the night, gold started buying. So there were like two buyers, right? From 12 a.m., which is basically the new day, the new candle they opened, you're supposed to expect sales. Okay, that's the normal thing, because if you come down to 1 hour, what you would notice is that price was making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So you expected lower high and more lower low. But price opened, instead of you to look for sales, because that would be the natural thing to do, because gold was bearish at the time. Instead of you to look for sales, gold was buying. So it was giving you two buyers at the same time, one for buys and one for sales. Whenever price does that, don't bother to trade it, because when price gives you two buyers, it gets stocks in the price tend to get stuck in the middle. And what happens is that price tends to range, meaning it says to go up, come down, go up, come down, and take a lot of stop loss that day. So stay off the market. So now, after I noticed this fair value gap, I was set on price coming to this level before I know what to do. Basically, before I know what to sell. Now, there are two types of retracements. Okay, there are two types of retracements. Okay, when price moves, there are basically two types of retracement. I'll explain. Price will be making a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Yeah. Now, if price is pulling back, okay, if price is pulling back for a retracement, there are two types. The first type is that price will pull back straightforward like this. Okay, price could pull back straightforward, straight and simple, something like this as well. This straight up push and upward buys is a very good type of retracement. Another type of retracement is that price could make a series of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs when making a retracement. Now, when price pulls back as a retracement, you will need a change of trend, okay, in order for you to properly buy. Because if you buy immediately, because price is pulling back and it is coming down in a series of trend, okay, what would happen is that the trend would prevail and price could sell further down. You get what I'm saying? So what you would do during when price is pulling back in a retracement format is that you will need a change of trend in order for you to buy the impulsive move. Okay. Now I know this sounds complicated, but these are the things you will learn in the This Mentorship Academy, This Academy in the mentorship section. So yeah, we teach all of these things, what they do, what they mean, how to interpret them, and how to take advantage of them. So what I did notice is that price made a retracement with the second type, a trend-like retracement. In that category, I noticed price making a higher high, higher low, okay, higher high, higher low, higher high, all right, higher low, and another higher high. So naturally, people would expect a higher low to buy. You get what I'm saying? Now, I waited because price had gotten to my area and I was certain that price was going to sell. And price gave me even more confirmations by dipping down and creating a change of trend. So all I needed was a pullback to sell more. Now, there's also a concept called CROT that the Liquidity Academy also teaches. I also noticed a daily CROT, the price, and this also gave me full confidence that yes, price is going to sell. Now, where did that confidence come from? Now, the confidence didn't just appear first, right? The confidence didn't appear first. So what I did was I first of all marked out the change of trend, where would confirm the change of trend, right? Here would confirm the change of trend. So basically, I needed price to break this low to confirm the change of trend real quick. So yeah, and my POI, my next POI was basically just here. Right, it was basically just here. Stop loss above this level. So I had a sell limit here. First, I had a sell limit here, targeting 1:3, nothing massive, nothing big. Okay, just 1:3. I wasn't targeting every year, just wanted to build 1:3 to go. And immediately, price, pull back that same night, that same evening, towards the early hours of the morning. And exactly by 1 a.m. in the morning, price got to my POI, my entry. I was tapped in an instant sniper. I did about 2,164 pips. It was no reversal of this sort. Okay, it was no reversal of the sort. Straight up the TP. One of very good days. Now, another thing that I did notice was that when price then did this whole thing, closing for the daily candle bias, I also then noticed at the daily time frame that price was giving us a very clarity in terms of that. I'm going to explain real quick. Now, this concept might sound confusing, but I promise if you join the mentorship, you will learn all of these things there, and they will be your grassroots and your foundation when it comes to trading. And what I did notice was the fact that price closed bearish in between the previous bullish candle, which indicated bearish pressure, and my target was basically at the base of this particular daily candle. So now I know price is going to sell to this point because of the bearicity that played out here, and immediately I was more confident in the sales, right? I was more confident in the sales. So what I did the following day is to basically take advantage of it. So I knew that when price sold, price is going to keep wanting to sell all the way to this baseline. Okay, this is where my target was. So what did I do next? What did I do next? What did I do next? So what I did next was quite simple, right? What I did next was quite simple. I marked out the fair value gap, because I always say that a fair value gap, okay, is a magnet that pulls price. And I noticed a couple here, number one. I noticed a few here, number one. Okay. So I noticed that price is going to make a pullback to this fair value gap. So I had a sell limit here as well. Okay. I call this on my Telegram channel and in the Liquidity VIP. So this is something that you want to be a part of. Okay. Now, this was my entry and my stop loss area, and this was my TP. Now, I held this trade for 2 days because that's how long it took for price to behave well for the sellers. Now, price came, tapped me in, and in no wise, price fell into profit. It was very, very nice. Okay. Now, as price was selling, there was a couple of pullback rejections. It was terrible. Okay. But you need to believe in your trade. You need to believe in your analysis. It was not easy waiting for price, but the minute price got to our target, immediately price made it massive muscle. If I was a bit this greedy, price would have, not hit my TP and reversed immediately, and I would have waited 2 days for nothing. So you really need to set a daily target, okay? And if this was just 1:3, so basically if I was risking $50, I would make $150 as my profit. This trade was 1:3. This was 1:3. Total was like 6 hour. You understand? So yes, this is something that was very, very good. The trade was simple and easy to take. Now, immediately price got to this level, there was a massive, reaction, okay, and which led to all of these buys. I did catch these buys, but I would explain how I caught these buys in the next video. So I hope you guys continue to watch. Yes, so this is how I was able to get in on this trade. I made use of fair value gap practically. I made use of the trend. I made use of the higher time-frame bias. I made use of key concepts and fundamentals that, are known knowledge in this academy mentorship. So yes, if you are particularly interested in learning how to trade the market with confidence, understanding what you're doing, you should really join the Mentorship Academy. So thank you very much. I'll catch you guys in the next video. Have a good one.